In technical analysis reports or videos, people often talk about supports, resistances, and trend lines. But what do those terms actually even mean? That's what you'll learn in this video. What's up? My name is Caroline and this is Wealth in Progress, where you'll learn how to make passive income with cryptocurrencies. This video is the second part of the chart reading course for beginners. In last week's lesson, we looked at candlestick charts, how to read them, and what volume stands for. Today, we'll look at some of the most important parts of chart reading in order to understand where the market will likely move next. These are supports, resistances, and trend lines. Now, if you haven't watched the first lesson of this course, I highly recommend doing that first. You'll need the basics in order to understand this lesson, so go down in the description or on top of my head to access that first lesson and then come back to this one. Now, as a crypto investor, you're likely looking for one thing above all else: how to buy the bottom and sell the top, right? After being in crypto for almost 5 years, my partner Kieran and I have learned a whole lot about charts and on-chain metrics that allow us to do just that. As a result, our portfolios have massively outperformed the market over the last couple of years. Now we'd like to share our tips and tricks with you. This is why we're holding a free masterclass where we share all of our secrets that allow us to buy low and sell high over and over again. Sign up now by going down into the description and clicking on the first link to get your invitation. Again, it's completely free and we'll show you our most successful trades and how you can replicate them. All right, let's dive in. All right, so we're again going to look at TradingView. That's the go-to tool or go-to website to do some chart reading. Again, I'll leave that link in the description. Now, there are lots of different support and resistance zones, but today we'll just look at the bare basics. All right, let's first look at the definition. What does support and resistance mean? Let's look at the definition on Investopedia. They say the concepts of trading level, support, and resistance are undoubtedly two of the most highly discussed attributes of technical analysis. Part of analyzing chart patterns, these terms are used by traders to refer to price levels on charts that tend to act as barriers, preventing the price of an asset from getting pushed in a certain direction. Technical analysts use support and resistance levels to identify price points on a chart where the possibilities favor a pause or reversal of a prevailing trend. Support occurs where a downtrend is expected to pause due to a concentration of demand. Resistance occurs where an uptrend is expected to pause temporarily due to concentration of supply. Market psychology plays a major role as traders and investors remember the past and react to changing conditions to anticipate future market movement. Support and resistance areas can be identified on charts using trend lines and moving averages. So today we'll also look at trend lines. In next week's lessons, we'll look at moving averages. Don't forget to subscribe to be notified when that lesson will go live. All right, now let's look at a few examples so that you can understand what support and resistance mean. So these are really the bare basics, so we're not even going to look at trend lines yet. Just look at the basics. Now, just to be clear, all of those metrics and all of those patterns and everything can happen on any time frame. So I just like to use the daily or the hourly or even weekly. I like longer time frames to see patterns very well, or long-term patterns, but you can choose whatever you like. So as an example, we'll just look at the BTC USD daily to see where support and resistance happen. So as mentioned in the definition, a support is where a downtrend is expected to pause. So it's basically like a lower level and the price is expected to go there and then bounce off and then go higher and then maybe come there again, but it's expected to pause there and not just shoot through it downwards. Now, resistance is the exact opposite. So that's more like an upper level where an uptrend is expected to bounce off. So an uptrend is moving there and then going back down, maybe touching it a couple of times, and it will eventually likely go through it, but it won't just shoot through that area. All right, let's take a look at the charts to find a few examples. So first of all, support. Now what you can see is every time it goes down first and then bounces off, that's basically support level. And what usually happens is that it builds up over time. So the more often it gets touched, the stronger it gets and the more difficult it will be for the price to actually push through that. So for instance, you can see here we've had an upwards trend first of all, and that stopped here. So that would be basically the first resistance. And at first that will just stop at some point for different reasons. It could be that another indicator shows that this is a resistance line, so for instance a trend line or moving average or anything like that, but we're not going to look at that yet. But basically it will stop somewhere, then we have a downtrend, and here it gets stopped at. So that's the first support area. then it goes a bit sideways, then it touches it again. And just to be clear, it can either be touched by the wick or by the body. It will usually be the body of the candle that touches this support area, but it can also be the wick. So if we take a look very closely, so that was the first support. You can see that it has been touched a couple of times by the wicks. It's not that strong if it gets touched by the wick. It's usually the body that should touch it. But you can see that makes sense where it goes there, because this has been touched a couple of times by the wicks already. And then it goes there again. So that support becomes stronger with every touch. And then we have a move upwards again. Then we have a resistance and a support. Now this support is likely... So what you can also see is that it's not always an exact level, but it's usually like a zone. So what you can see is that here it bounces off, so the body bounces off here, the wicks go a bit lower, and you can see that here that candle has been stopped at, that red candle has been stopped at, and it went higher again. So this again builds a support area, and that's not like perfectly on one line, but it's a zone between like of a couple of $100 or $1,000. All right, so we've seen that a support has been built here, but what's more interesting is after a certain period of time, so that has been in January, and then it went up and up and up, and so that support has been totally irrelevant for a long time. And then up until May, where we had a price reversal and the price trend was downwards, that's when the support becomes important again. So if we have a downtrend, we want to look for his previous supports to see where the price could stop at, where we could expect a bounce. So here it went downwards. So the first support that you can see would be this one. So that would have been at around 45,000, and you can see that just blasted through it. So that support didn't hold, and most likely because it wasn't a strong one, because it was only touched once. Then it went further down, and then what's important to note is that a resistance can become a support. So in any case, that support and resistances are areas where the price is expected to stop, where it's expected to take a pause or take a reversal. So here it has taken the reversal downwards, but now that can become a support actually. So that will be the next area to look at. So let's see what had happened. Well, it actually blasted through that as well. And then you keep looking at areas where it could bounce off. And you don't have like a 100% guarantee, but if you look at it with other indicators that can indicate support and resistance areas, then it becomes much clearer. Again, for more deep dive videos, join the Academy. That will all be shared in there. So that one didn't hold either, but then let's look down. So that area, so that would be between about 30,000, or let's say between about 29,000 and 32,000. That zone is a pretty strong support zone because it has been touched a couple of times here by a couple of wicks or bodies. So let's look what happened here. So that was that area. The first wick went actually down pretty nicely to that support, so just a bit lower, but so it can go a bit lower, but it generally still means that it bounces off. And then it went back up. And then this zone has been touched a couple more times, so up until here. So a couple of wicks have touched it, and then the strongest one is that bounce off. So that went very nicely to that support zone at 29,000, and then it bounced off here. So that means that support zone has become even stronger because now it has been touched almost 10 times by wicks or bodies. So that would be very, very difficult for the price to like break through and break lower. Now, if you look at current price actions, I'm a bit surprised that this hasn't touched this zone again. So I was expecting that the price would go down again and test this support zone again, because price actions tend to be attracted to those support and resistance areas, because as mentioned in the definition, traders and investors look out for those areas and actually want to play that. So whales often like to push it just a bit below that support zone so that everyone freaks out, and then they can scoop up really cheap, really good and cheap prices and then push it up again. So that hasn't happened here, so I'm a bit surprised about that. We'll see if it still goes down there. I was expecting it to retest this zone once more. And then if we just take a quick look at resistances, it's basically the same thing, just in reversal. So we would look at where the price went up and then has been stopped out. So every time it went up and has been stopped out, that's a resistance. So you can see from here, the next one would be at around 43,000. Or it's a range again between 43 and 45,000, I would say. So that's just looking at basically historic data. Oh, we've also got one here. So that makes this zone stronger. So that is between, yeah, I would say between about 42 and 45. So that's another zone where the price is probably gonna have a hard time pushing through. So it is expected to bounce off there, go lower, and maybe either retest this support zone or just retest its last support zone at 35,000. So that's not entirely clear, and that's what we would have to look other indicators at. What we would have to look at other indicators and on-chain like whale metrics. That helps you a lot in understanding where we'll likely move next. All right, now let's look at trend lines. That's an important part as well that can show you support and resistance areas. So what is a trend line according to Investopedia? It says, trend lines are easily recognizable lines that traders draw on charts to connect a series of prices together or show some data's best fit. The resulting line is then used to give the trader a good idea of the direction in which the investment's value might move. Okay, so trend lines are not something shown in the charts, but that's something that you draw yourself. And what that basically means is you see a trend upwards or downwards, and you draw a line underneath that. And what that means is that so it's like a almost like a diagonal support zone or a resistance zone, and it means that it is expected that the price will bounce off of that zone. Now it will usually break through a support or resistance trend line at some point, but usually that means a trend reversal. So if we have an upwards trend line, then it means that it's expected to bounce off there, and then once it breaks through, you would expect that the price actually goes lower. The same with a trend line that goes downwards. Once the price breaks through, you actually expect that the price goes higher. Now with BTC USD, we've actually had a pretty strong trend line those past few weeks. I'll just show you where that is. So you can draw that here. So to find that drawing thing, just go here to the left to that straight line. So that says trend line. And then just click on that and then hold it, and I'll show you again. Now hold it, paint until where you want, and then click it again. So I'll delete that. Okay, and then if you want to correct it or adjust it, then just click on one side again and then adjust it. Okay. So that was the trend line that everyone was watching. And again, it can be touched by the body or the wick. Usually you want to look at where the body touches it, but it can also be a wick that touches it again and again. So you can see we've had that downwards trend starting in November and ending in actually just the end of January. So it broke through on the 4th of February, and now it is expected for the price to move higher. Now, that won't give you the complete answer, of course, because we've got lots of other information metrics to look at. And what can also happen is that whales actually purposefully push the price up to liquidate shorts. So that's people who are betting on the price going lower. And by pushing the price higher, they will get liquidated, meaning that all of their capital is gone. Now, if a lot of shorts have been placed, if a lot of people think that it's going downwards, then it will easily push the price higher if whales are actually coming in and actually want to push the price to a higher price point. And that's because people who are placing shorts need to set a certain level or have a certain level after which their capital is not enough to back their position. So that means they get liquidated, and if a lot of those have been placed or if a lot of liquidation levels are at this trend line zone, then the price easily shoots up because it buys all of those liquidation zones up. So breaking through the trend line is an indication that we might face a price trend reversal, but it's not a guarantee. You would have to look at You would have to look at so many other metrics, especially also on-chain, which we'll look at in the masterclass. That will truly give you an edge, and that is something that you can't read out of the charts. That shows you what whales are doing. That's really helpful to use in swing trading and long-term investing. But in general, that's what that means. So that's a downwards trend line, and once it's broken through, you would expect the price to move higher. Now we can also draw an upwards trend line here, for instance. So that's pretty steep, I would say, like that, more or less. So that has been touched once, twice, 3 times, and then you can see, let me just draw that a bit higher. And then you can see here it's broken down. So, and here it's actually touched again, so that can happen as well. That just shows you that this is a strong trend line. And then you can see it breaks it definitely breaks through that, or it doesn't manage to get up that again. So that has been an upwards support trend line, and then it becomes a resistance trend line. And you can see it doesn't manage to push through that again, and that is why a downwards movement is expected. But as you can see, that doesn't mean that it will go down for years. That was just a quick downwards movement of a couple of days, and then it pushed up higher. So there's no guarantee. This is just one indicator, and you absolutely definitely need to keep in mind to look at many others to get the full picture. Alright, so that's it for this lesson. That's what support, resistance and trend lines are and how you recognize them. Again, keep in mind that's just one piece of the puzzle, and you need much more information to get the full picture. But it's a great way for you to understand where the market will likely move next. In the next lesson, we'll look at the most important indicators such as moving averages, Bollinger Bands, RSI and Ichimoku Cloud. Don't forget to subscribe to be notified when that lesson goes live. If you like this video, hit the like button down below, share with your friends, and be sure to subscribe. Thanks for watching, and I'll see you in the next video. Bye!